please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, counting down to pre-open, the SGX Nifty is indicating that we'll have a weak start. 10,340 is the level is important because we were not trading on Friday. SGX Nifty was, and that day was a big downtake. So from the closing on Thursday to this point, it's indicating almost a 100-point gap down. VK Sharma is with us from Hdfc Securities. Vinod, good morning. Let's start with stocks which have done well. Two of them, in fact, on your list as well: Ashok, Leyland, and NIIT Tech.
Yes, NIIT Tech, obviously, because the stock has been recommended by your other analysts also, and I like this because the open interest has been built, the stock has gone up. So in NIIT Tech, I'm buying the 880 call at around 30 rupees, stop loss at 24, and a target of around 45. So this should be easily doable. And in case of Ashok Leyland, I expect the buoyancy in the stock to continue. Almost 14% OI has been added in the current series. The stock is up 6%, although on Thursday there was some slack of open interest, some profit booking was seen. However, I am buying the 142.5 call at 3 rupees. Mind you, on Thursday it closed around 4.25, so expected to open slightly lower. At 3 rupees I'll buy, stop loss at 1.75 and target around 5.5.
Okay, that's on Ashok Leyland. Vinod, hi, good morning. Any other stocks that are on your radar this morning?
Yeah, other stocks that I have is IndusInd Bank and Rel Infra. Let me also tell you one more thing, why I'm not looking at purely the indices so much. I believe that whatever has happened in Tripura will have a large impact on the rest of the India, and especially West Bengal, where 42 seats will be up for grabs in the next general elections. So it is going to give nightmares to certain people, and therefore the Nifty currently does not capture the bounce back which could happen today. So with this, while it is very futile to look at a banking stock now, but still I'm banking on IndusInd Bank. Buying the 1720 call at around 20 rupees. Yesterday on Thursday it had closed around 24, so I'm buying it with the stop loss at 14 and a target around 30. Reliance Infra, obviously some open interest was added on the shorter side on Thursday, and I'm buying the stop loss at 14 and a target around 30. Reliance Infra, obviously some open interest was added on the shorter side on Thursday, and I'm buying the 440 put there at around 17 rupees, stop loss at 13 and target around 25.
Okay. Thank you very much, Vinod, for joining us with your trading strategies. At the moment, actually, the market's opening with a huge green tick. We don't know if that will sustain. So no reaction at all at the moment only, to what happened globally on Friday. But now the gain is now sobering down to a 0.2%. It's really difficult to guess which way stocks may move. Oro is starting very deeply in the red. It's starting at -10. So, I mean, I don't know if it's worth reading any of them. Things are in an extremely wild shape at this point in time. Reliance is up 5%. Hindalco is up 1.7. Going by LME trends, this need not play up at all. That's the dollar rupee, and that clearly is indicating that things will not look too bad. That's a traded number, and that's indicating that the Indian markets need not react too badly. At least the rupee market is not reacting too badly at this point in time.
Oh, absolutely. I mean, I think if the market opens with a flat move as the SGX, as the pre-opening rates are suggesting, it's something that the street will definitely like. But we'll reserve our comments till the market stabilizes. For now, let's get some more views in. A couple of these auto stocks do look good. So TVS Motor is surging in pre-opening on the back of good numbers. But let's get a quick handle on what's happening in the commodities space this morning. Manisha Gupta joins in for a roundup on all of that. Manisha, hi, good morning.
Morning, and thank you so much for that, Sonia. I want to start with the steel prices. Remember, we have seen 20% gains on steel prices in this year, and this has been on the anticipation of precautionary measures that we finally have seen come in from US or will be finalized in this week. So that really has been keeping the steel prices on the higher side. But if you look at another number, the steel and aluminum products account for just 2% of imports into US. So it's not really going to impact the product prices so much, except as the raw material. So that is what the markets will will be diverting or would rather be segregating at is in sense of numbers there. So while of course we have seen an impact come in for the metal prices early in Asia today, where you have the iron ore prices falling to a 2-week close and the other metal prices also have been slightly under pressure, you have seen some strength come in for the crude oil prices. Some of the latest analytical international reports do suggest that the US steel industry will fall short of capacity when it comes to pipelines and new projects that the energy sector in US was undertaking. So that is something to watch out for. Apart from that, it also is the shale companies and the OPEC members meeting in Houston today to talk about the global demand and supply. So ahead of that, you have seen 0.5% gain come in for the crude oil prices there. Some strength also has been seen in the precious metal prices because the dollar index has declined. You have the dollar trading at a 2-year lows versus the Japanese yen. Other high-yielding currencies are doing well. So overall, in the commodities sector, we have started Asia slightly on a positive note right now.
Okay, Manisha, thanks a lot for that. SP Tulsian of sptulsian.com is with us now. Mr. Tulsian, good morning. The first stock that I want to discuss with you is Aurobindo Pharma, down 4% right now in pre-opening. Your thoughts on the nature of observations and how the street should react?
See, I have not gone through the observations deeply, so it is difficult for me to comment on those things. But yes, if you take the call on that unit, which have about 25% of the pipeline, of the approvals and all that, but we have in fact been keeping the positive view on the Aurobindo Pharma. But coming on the observations, because it can have its serious implications, I won't be taking them lightly that those are not seen to be of serious nature and all sort of things. So till then, it may have its impact, but otherwise we have been keeping a positive view on Aurobindo Pharma.
Okay. Well, dollar rupee is clearly reacting to the dollar's weakness globally. Yes. So maybe we should not take it too much as a lesson on how stocks will open, because now the Nifty is giving up most of its gains, likely to start in flat terrain. And the metal stocks now are showing red because initially in the morning Hindalco actually started in the green about a minute back, that is. Now it is down 2.4%, and other metal stocks are also falling in response to both an expected tariff war as well as lower prices on the LME. Good morning, Mr. Tulsian. The metal stocks, will you use this dip to buy at all?
See, I may not use this dip to buy non-ferrous one, more especially the Hindalco and Vedanta, the two aluminium producers. But coming on the ferrous steel, where the import tariff of about 25% is being talked, if you really take the situation for the India, specifically for the ferrous steel, in fact, India has turned a net exporter in this last maybe 6 or 8 months. And if US initiates any kind of tariff war, then definitely India can also, start having an MIP kind of things, which you have seen about 18 to 24 months back, which has really seen the revival of our steel sector. So honestly, if you really see the situation prevailing in our country and closure of the mills, though if one wants to raise a red flag, then one can also say that after the winter production cut in China, again China's government may relax the cut and we may see increase in the production in the Chinese steel, and one can also argue that will be seen, which is in fact not now talked by the media, but maybe from April to October the Chinese production is going to get increased of the steel, and that can also be seen as a negative. But in spite of considering that, I don't think that things will be very negative, because Chinese have realized that there is no point in cutthroat competition, or maybe dumping the steel below the cost of production. When having seen the closure of the induction furnaces and the old furnaces because of the pollution, I am not too worried on the ferrous steel, and keep my positive view on the ferrous steel, maybe like Steel Authority and JSW Steel. Two stocks in specific seem to be as positive and can be bought at the declines.
Okay, well, these are stocks that have been moving up recently. Another stock to look at this morning is Dilip Buildcon. It's up in the green. It's been in a big bull market, and the company has now exceeded the top end of its order inflow guidance of 8 to 10,000 crores for FY18. So that stock is now up 2%. Mr. Tulsian, good morning. Any thoughts on how to approach some of these infrastructure names like Dilip Buildcon that have been doing quite well lately?
See, definitely this story is unfolding in a very big way with the order inflow coming in and all those things. Dilip Buildcon, but definitely have surpassed the order guidance. But sometimes you get worried on the execution capability also, because what we have seen in the past, maybe about a decade back, when market was only chasing the order inflow, not the order execution. I'm not saying I'm not raising the doubt on the order execution capability, but beyond a point, if you just keep having the order inflow, the things can go haywire. So it is better that to look for the other other companies, those who are engaged in the similar space, maybe like NCC or maybe like J Kumar, where the things are seen to be more visible, maybe in terms of order inflow as well as the execution capability. So keeping a positive view on the sector, but Delhi Buildcon may not be in our buying list now at the current level.
Okay, Mr. Tulsian, thanks a lot for your time this morning. Of course, we'll talk to you in closing bell. For now, the pre-open rates have settled and nowhere near what the SGX Nifty indicated. 30 point lower on the Nifty, 10,428, 70 lower on the Bank Nifty. So let's see how that actually pans out. Udayan Mukherjee is with us this morning. Udayan, good morning. So, this fresh issue from Donald Trump threatening a bit of a trade war, it's once again sent the global markets in a bit of a tizzy. Do you get a sense that a fresh round of decline may have started?
Morning, Anuj. We'll have to see how this situation unfolds. The first salvo has been fired by Donald Trump, and we've seen some reaction from Europe saying that we'll also do the same to you if you think of higher tariffs in America. Now, we also have a dictatorial situation in China, so we don't know what the reaction from there will be, but it will be, I don't think China is going to take this lying down. I have memories of 2002 and how this story played out. In a very short span of time, a fairly ugly kind of a trade war erupted then. It was controlled in about 12-18 months, but it did a lot of damage to the metal space. So we are not there yet. We don't know how bad this could turn out to be. But Donald Trump does not strike me as a very reasonable kind of a man. So maybe tempers will remain elevated for a while. And we need to be wary about the metal space, which is unfortunate because metals was one of the big contributing factors to whatever little profit growth we've seen. And we do not want a situation where metals take away from the FY19 earnings growth that we are looking at. So it's a difficult situation. It has royal sentiment for now, but we'll need to watch developments as they unfold to conclude that this has the shape of a trade war which can dent markets back more seriously.
Okay. Yes, global headwinds are definitely there. Then, good morning. Thanks for joining. How should an investor look at all this? We've had a political result over the weekend which clearly strengthens the ruling party and improves its chances of continuity. Therefore, should we, rejoice on that macros to that extent, buy a dip? Do you see too much of a dip now?
It's possible, Lata. I don't know how this story will play out. There are too many things which are up in the air at this point. At the start of the year, we were talking about how there are no risks visible. It was just blue sky territory. And right now, we've got a trade war possibility. We've got currency instability. We've got interest rate hikes as a big possibility or a threat for the market, tepid earnings growth, and politics. You mentioned that while today's news will go down well with the street, I think if there was an equivalent of a political VIX, it would remain very, very elevated through the course of 2018 calendar because, with state elections, more important states, it will keep fluctuating. So the volatility on that account will remain very, very high, and it has not gone away after the victories in the small northeastern states. So I think the visibility is very clouded, and I think we'll see more volatility down the road. And I don't have the heart to say that we've seen the worst in terms of where the index might stabilize.
Okay, but then we'll just come back to you in a bit. For now, let's just take the opening call from Ashwini. Ashwini, pre-open settled at 10,428. Your thoughts and 9-10 call?
See, it's good that it's opening in a not with a large gap because that will allow you to go short. I would think if there's any positivity or any sort of pullback, you should get short. I think SBI you can sell with a stop of 266, target of 252.
So you're not selling right away. You will sell only if you see green.
See, often when you gap down, you tend to have a pullback in the first few minutes. That gives you the opportunity to sell.
All right, some stocks that are looking good in pre-opening are the IT stocks. So Wipro, TCS, both in the green right now. Hero MotoCorp as well after the good sales numbers. Udayan, good morning. We were just speaking with Moshe Khatri a while back, and he said that the Indian IT companies are now evolving well in the digital transformation space, and there's a lot of money sitting on the sidelines to be invested into the IT sector. Despite the outperformance we've seen already, do you think there could be more to go?
Moshe would know much more about it than I do, but Sonia, about the kind of digital forays or successes that the Indian companies are making. I think as we discussed last time, we've already seen some degree of a valuation pullback, but I suspect that the market will wait for endorsement on the volume growth front through the course of this year. I think it would be very good if IT starts contributing to earnings growth as it has not over the last 2 or 3 years, because I suspect that we will need IT to chip in for FY19 earnings growth to be anywhere close to what the street is expecting. So we'll wait and see, but right now IT also benefits because the market's now a little stung on the risk front, and IT always benefits from a defensive kind of positioning. So not only the hope of growth recovering, and at this point it is only hope, I think also the characteristic of the market now has changed from chasing a lot of the riskier, higher valued stocks to becoming more defensive in the near term to preserve capital. And in that mode, IT can always outperform.
Well, actually, the weekend has been so heavy with so much other news that we forgot that we had very good two-wheeler numbers from practically all the two-wheeler makers. Well, Sudarshan, Hero Moto, Bajaj, TVS, is there any trade in any of them?
No, there's no trade on the long side. The only one is Ashok Leyland, where an investing opportunity still comes, but that's not two-wheeler.
Okay, yes, take your point on that. Udayan, I don't know if you took an interest in all those minute numbers, but those were fairly mind-blowing numbers coming from everybody in the two-wheeler space.
Autos are doing quite well, Lata, and it is certainly a green pocket overall. But it's not such a major contributor to overall earnings. So it looks like it is still quite patchy, and autos have actually, the stocks have also done quite well, and there is, I think the last few months, constantly the auto numbers have delivered. So I don't think you can really take out too many wrinkles from that sector. Your tractors are doing well, now two-wheelers are recovering, cars have been doing quite well. So, I mean, if it's one of the good spaces in the market to remain invested in through this volatile phase.
Okay. Well, I wanted to ask you about the banks, where the bad news just doesn't seem to end at all. But we just have about 30 seconds for the markets to open. So we'll keep it with the rates. At the moment, it doesn't look like a very ugly start. It looks like it's only going to be 30 points down on the Nifty and 70 down on the Nifty Bank, which means, what, 0.3% on both of them. But let's see when trading starts whether this cheer is maintained. There isn't so much cheer coming from the global markets after all, and especially on the metal space. So we will have to see whether people are able to hold up